Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. One of the things that I like to do is here and there, whenever the markets are going kind of sideways or markets are down quite a bit, I like to look around and look for companies that are down quite a bit to see not only the ones that I own, just obviously potentially companies that are really good companies that possibly might be on my watch list. And I want to see if they're down, if they're up, if they, if they're undervalued or overvalued, just kind of get a feel of what's going on in the market. And sometimes, and at the same time, what I would like to do as well is, I normally tend to do is, I look at the indices. So I look at the Dow Jones and I look at the S&P 500, the Russell 2000, all of these on the Nasdaqs and so on, and just look at the indices and see if they basically how it's doing overall for the month, for the year, and so on. And then look at the individual companies within those indices. And I'll really like doing that because it kind of gives me an idea of where the general markets are. And when I look at, then I can look at in my portfolio and say, you know what, this company is down relative to the rest of the market and so on. So it kind of gives me an idea of where basically some of my stocks should be. So what I've been doing in the last couple of days is just looking at the Dow Jones. And I did a few videos a while back, I think almost about a year and a half ago, where we looked at the 30 companies that are in the Dow Joneses that are halal, obviously Sharia compliant. So I'm going to do that again. And the reason is because I've just looked at it the last couple of days, and I'm going to explain to you why I'm going to do that. But before we get to that, please like the video, subscribe to the channel if you haven't already, and let me know if you obviously have any questions. A lot of you have asked me a few questions last few weeks, so inshallah I'm putting together a video just to kind of answer your questions in the next couple of days. We'll do that inshallah soon. Now the only thing I want to talk about right now is basically the membership level for the Patreon account. This is what you get, okay, all of these things. You can pause the video, have a quick look, but one of the things that I'm trying to build is that private Discord access, inshallah, that where we can have brothers and sisters who are very much like-minded, who will inshallah help each other build their portfolios, build the ETFs and whatever it is that we need to, and have a good discussions about stocks that we own and share good practice, inshallah. Let's get to the video now. The Dow Jones right now is down for the year. Is actually almost flat. Okay, so this is the DJI is the index basically that tracks the 30 companies that are in the Dow Jones, right? Now it's flat. For the last 6 months, it's actually down about 1%. For the month, it's down about 1.3%. And for the last 5 days, about 1.5%. A year to date, however, it's only up by 5%. So that's really interesting. So I'm looking at this in comparison to the S&P 500. So the S&P 500 is about 7.5% up. The last 6 months is about 4%. And 1 month is just flat almost. And just this week is down a little bit. Okay. So in comparison, a year to date, okay, if we just go back to the year to date, this is flat and this is 7% up. So I thought it would be interesting to look at the companies within the Dow Jones and see if there are some good values in there, some Sharia compliant companies that you could potentially look into adding to your portfolio. So today I'm going to share with you 5, and then in the next couple of days I'm going to share with the rest of them. So inshallah, hopefully by the end of next week we'll have all 30 companies. Those are that Sharia compliant. I'm going to leave out some companies like Apple, for example, that are kind of compliant right now but could potentially become non-compliant because of those 4% interest rate that they're paying for Apple Pay, whatever it's called, the Apple accounts that they started recently. Just for that reason, I'm just going to leave Apple out and maybe a couple of other companies, but I'm going to include all the Sharia compliant, even if it's kind of borderline when it comes to the interest bearing debt. I'm going to include them, inshallah. So you're going to have to do your research, inshallah, and I will share with you as well, obviously, that information. So let's get started and let's look at these 5 companies. So the usual things that we're going to look at are quite basic, but you can go away and do a little bit more research to find out a bit more about the companies. So the market cap, obviously how big the company is, do they have a wide economic mode, but narrow economic, none, whatever it is, we need to look at that, because that helps us. Because if a company has a competitive advantage over their competitors, then that means potentially this company is going to be around for a long time. Then if it is basically cheap right now, then you buy that company, you could potentially own it for a very long time, knowing that that business is not going to run out. basically is not going to go bankrupt completely. So the dividend yields, basically we're looking at latest increases of that basically any dividend increases recently in the last basically quarter and so on. The 5-year growth rate, so the basically dividend growth rate for the last 5 years. We're looking at the payout ratio, how long they have increased that dividend. We're looking at the payout, the annual payout, so how much in dollars they will pay us. Safety wise, so according to Simply Safe Dividend, okay, profit margin, return on equity, just to kind of see if the company is actually profitable, if they're taking care of the shareholder equity and so on. Basically looking for us in terms of making sure that we get some of the money back and they reinvest that money properly and so on. Free cash flow to help us. If the company is actually has free cash flow, then that means they can pay us the dividends, they can increase it, they buy back their own shares, pay debt and all of that stuff. And the last 10 years, just to see where the company's at. Okay, so where has it been in the last 10 years? And then we look at the the earnings for the next couple of quarters and next couple of years to see if the company is heading the right direction and so on. Morningstar valuation and then fair valued for Morningstar. Okay, right, let's get started. And the first company we're looking at is Visa. Visa is one of the companies in the Dow Jones. Okay, 473 billion market cap, has a wide economic mode. $230 per share is where the price is at. Dividend is quite low, but when you look at the latest increase of 20%, which is absolutely amazing, if they continue doing that, they sooner or later that will keep increasing, obviously, but that's relative to the stock, obviously, price and so on. And the 5-year growth rate, we're looking at about 18%, payout ratio of 21%, dividend streak of 14 years. So they have increased that for 14 years, which is quite nice. $1.80 is what you will get for every share of this company that you own. Safety 99%, profit margin 50%, return on equity. Look at that, absolutely amazing when it comes to that. And they have over $18 billion in the bank right now. They can do whatever they want to do with. This is the type of business I own and I love to own, right? And a lot of the companies in the Dow Jones, is what you will notice is they do actually are profitable companies. A lot of them pay dividends, apart from I think just a few. And that one of the reasons because they have a free cash flow and have a positive earnings and so on. Total return in the last 10 years, we're looking at about 18%. Next year, 14% growth in terms of earnings. And then basically 15% every single year for the next 5 years. Morningstar is saying about is 4% discounted right now, $241 per share. They have increased this from, I think it was 221 at one point. Now they've increased it to 241, which is actually quite good. The next company we're looking at is CocaCola. CocaCola is a company that I do not talk about much, and Pepsi. And the reason is because about 2 years ago, they actually made a deal with another company to actually sell some alcohol. But right now, into looking at their revenue, that's almost non-existent. So I wonder what's happened to that. But it's still Sharia compliant company nevertheless. So you need to look into that if you are basically investing in the company and make sure that that does not appear in the revenue anytime soon. I don't know exactly what's happened. They built some American companies. I can't remember exactly the details, but they are Sharia compliant as we speak, and that's the reason I've included. So you have to be careful. $276 billion market cap right now. Wide economic mode. Price is $63 per share right now. I remember this company at the time where they were about in the 40s, not long ago. And look at them now, 63. I think it was in the 50s, maybe late and early 50s. Dividend yield of 2.88, which is quite nice. Latest increase is just about below 5%. 5-year growth rate of 4%. Payout ratio is 71%, which is quite high for this type of business. It's a legacy company. It's a huge company. It's been around for donkey years. And I think 71% basically payout ratio is quite high for me. Dividend streak of 60 years, so they are dividend king. Annual payout $1.84, safety 80%, profit margin 22%, return on equity 41%, which is quite nice. Free cash flow $9 billion. Total return in the last 10 years, we're looking at about almost 7%. Next year, they expect the earnings to grow about 8%, then 6%, 10% premium right now. 58 is where the price should be. Now, the next company we're looking at right now is Amgen. Amgen basically is one of those companies I used to own. I sold it recently because the debt level was kind of getting a little bit too much, but it's still Sharia compliant in terms of, nevertheless, $124 billion market cap. It has wide economic mode, $231 per share. I think I sold it slightly higher than this. I'm still looking at this company because I really do like the company, but we'll see. $231 per share right now. Dividend yield of $3 and 3.67%. Latest increase is almost 10%. 5-year growth rate of 11%. And this is why I would like to own the company again. Payout ratio only 46%. 11 years of increase in that dividend. $8.52 basically cents is what you will get for every share of that company. 74% safety, profit margin 30%, return on equity 210, free cash flow $7.5 billion, total return in the last 10 years 10%, next year about almost 6% growth, and then 1.7% growth after that for the next 5 years. Discounted right now about 9%, $255 per share is where the price is at. Next one is a little bit of a controversial one in terms of the lawsuit that's going on right now, but nevertheless I own the company, I still own it, still buying it a bit more every opportunity that I get, and that's 3M. 3M is one of the companies that has been in the Dow Jones for a very, very long time. $55 billion market cap. It has wide economic mode. $99 per share is where it's at right now. Is below 100, so I will be buying more of this company in the next few days. And dividend yield of almost 6% dividend yield, which is absolutely huge. The reason I'm buying is not, by the way, just the dividend. It's not just because the price has gone. My average is about 150, so I'm gonna need to average it down, inshallah, and I'm down quite a bit. I'll share it with you in a second. So almost 6% dividend yield right now. Latest increase is just it was 0.7, so they just doing it to keep this dividend king thing going on. But 5-year growth rate of 5%, which is absolutely fine. And then when it comes to dividend streak, 64%, 64 years of increase in that dividend. 63 is okay for payout ratio. 61 and above is a little bit questionable. 60 below 60 is absolutely fine. $6 of in terms of annual payout, $6. Safety, we're looking at about 60%. Profit margin of 16%, return on equity 37%, and free cash flow $4 billion in the bank right now. Total return in the last 10 years will look about 3%. Next year about 11% growth, and then 2% after that for the next 5 years. And then Morningstar is saying right now it's about 22%, 21% discounted, $127 per share. Even if it gets to that, I'm not going to break even. So that's the reason why I want to average down, even if it gets to this fair value right now. The next one is Nike, $188 billion market cap, wide economic mode, $120 per share, dividend yield of 1.11%. Latest increase was 11%. The 5-year growth rate was 11%. 36% payout ratio. This is what you want to see. They have increased this for 10 years. They pay you $1.36 for every share of this company that you own. 99% safety, 10% of profit margin, and 36% total return on equity. 3.8 billion dollars of market cap, free cash flow. Total return in the last 10 years, we're looking about 15%. Next year, we're expecting about 25%. Remember, this is just expectation, right? So about 25% growth in terms of earnings, and then growth estimate for the next 5 years is 8%. 11% discounted right now. $138 per share is where the price should be. Again, these are 5 solid companies. Okay, I would say this you just have to be careful, okay, because the lawsuit is still ongoing. With this one, you just need to make sure that the alcohol situation is not basically part of their revenue, and it doesn't basically appear there anytime soon. Other than that, the other 3 are absolutely solid businesses. I do like all 3 of them. I used to own basically this one here. I haven't looked at Nike for a long time. I've kind of stayed away from it for a while because I wasn't sure where the company is heading. The PE is slightly higher, but right now it seems it's actually discounted. So it might be a good time maybe to look at. All 5 companies are Sharia compliant. The one thing we need to check is this bit here, okay? So Amgen and 3M basically are heading towards that 30%, 33% cutoff if you like. And this is something I'm looking at. The AAOFI standards, I am not really happy with it. So there are other alternatives that I'm looking at right now, because this only looks at it from one basically quarter perspective, one whatever, and that is not good, because you're gonna buy a lot of stocks in the high and then sell it very, very low whenever basically the market cap goes down. So there is an alternative where it talks about basically instead of looking at a 1 year, we look at about 36 months, for example. So the market cap basically you look into the last 36 months rather than just basically what's happening right now to this stock. So and because of that, it will average it out, and most likely you're not going to end up in a situation where you will end up selling your stock. Okay, right. So 3M, I do own it in my portfolio. There we go. I am down 30% right now, almost 31%. I do own Visa. Okay, and I don't own any other. Amgen, absolutely looking at it again. Hopefully we'll see if they start by basically paying off their debt a little bit more in the next couple of quarters, possibly by the end of the year. I really like the company, I like the product as well, so hopefully maybe I can add it back into the portfolio at some point in this year. Right, there you have it, 5 different companies in Dow Joneses. We will look at another 5 in the next couple of, basically maybe tomorrow or day after. So I'm gonna try to get these videos for all 4 or 5 of them as soon as you can, as soon as I can, so you know exactly the 30 companies that are in there, which ones are Sharia compliant, and you have at least to overview. And that's, inshallah, that's my job. That's what I'm going to do, inshallah. If you like this type of content, please like the videos, subscribe to the channel, share it with your family and friends, inshallah. We're trying to build a community of Muslims, Islamic investors, Sharia compliant investors who are very much like-minded, inshallah. So that's the plan. Have a wonderful day. Assalamu Alaikum.